This is Digital Perspectives with Brad Kimes. Subscribe for new content notifications. Now, here's Brad Kimes. Come on in.
Welcome back to the show, everybody. You can follow me on Twitter at BackupBradley above at the top of the screen and everything that we're talking about here. So obviously, the prices are falling like manhole covers from the sky. Watch for falling pianos, for goodness sakes. Let's just take a look at this, because what I want to go through today is what I believe is the missing component from our equation when we get a little queasy when we see the market doing these things, when it's turning downward. First of all, I'm an optimist. I believe I fully understand what's happening in the space. I can't predict to tell you when it's going to turn around. I don't do those things, but I do feel like I understand that we are this early, that we are seeing these fluctuations in price for a very, very specific reason, which we are going to cover here. And we're going to talk about what is missing. And when that component is added in, it will be a brand new day. I can guarantee you that. And I'm going to show that to you in some other examples. So let's go ahead and look at this real quick. So right now we're looking at the market. It's just a sea of red, right? So XRP is down 6.75% right now, 25 cents. I call that a fire sale at my house. You better believe it. Me and Mrs. Backup are going to have a discussion about getting another shallow bag, and I'll blame it on Mr. B XRP. Anyway, shout out to him. So this is from Danielle DiMartino Booth. I covered this in this morning's video, but it's going to set the tone for where we're going today. So don't go anywhere. Stick around. Give me a second, because we're going to get to the end of this thing. So the Fed is endeavoring to do what 79% think is impossible, violate the law otherwise known as the Federal Reserve Act of 1913. If the recovery is anything but V-shaped, the Fed will fail in the foot race between liquidity and solvency. So then, we've heard Jerome Powell speak today. Jerome Powell has spoken, and basically, I think digital asset investor has summed it up for us all. Translation, we're screwed. By the way, that's academic speak. Shout out to DAI. I think he said it best, and you can't say it any better. And honestly, there was a nice comment built here from Sasa P that says they know the money printing is about to cause inflation like crazy, but in terms of average, things don't seem bad. But they are in reality really bad. Very slick move on their part. That is exactly what I see happening, and I thought Sasa P really laid it down nicely there, just to build on DAI's post. So shout out to both of them. Moving on, to add to this, it looks like the CEOs are kind of hip to the market going south here at some point too. U.S. stocks are flirting with record highs, and CEOs are cashing in their chips. You know, time and time and time again, we see this kind of, it's a very circular pattern, right? You know, they understand what's happening. They understand it better than most. So obviously a little more forethinking on their part is what it looks like from here. And that's the tide in the traditional markets and the economy and monetary policy and those things. And I'm going to do a video early next week that is going to address an idea about some monetary policy that I've had for a while. And I'm excited to bring that to you guys probably Monday, I would imagine. So, okay, let's keep this going. So this is a clip. Thank you to Lord XRP. So this is a clip from some time ago with Brad Garlinghouse and Julia Chatterley, and you'll know that because they're talking about, I think it was 200 partnerships, and you may or may not see it. I'm only going to play about 30 seconds of this clip, maybe a minute at most. So let's listen to what Brad says here, because it's going to take us to the real conversation that we need to have, especially on days like today when the price isn't doing what you wished it would. So let's go ahead and listen to this right here. Here we go.
Cryptocurrencies has been volatile. I asked Brad if the message to investors is don't use XRP to speculate.
People are going to speculate on different asset classes. People speculate on gold, currencies. You name it, people are going to speculate. When we think about this, and what I've said very publicly is I think the long-term value of any digital asset is going to be derived from the utility it delivers. There is a lot of hype in the crypto market space. We've seen that even recently. A lot of attention around what's going on with Libra and Facebook's announcement around Libra. Today, that's just a white paper.
There you go. And the reality is use case. He just said it. Now, he said this some time ago, but nothing's changed. Nothing's changed, has it? Well, I'm going to give you a couple examples right here, and I could sit here for hours and give you examples, but I'm just going to give you a couple. Let's listen to this from Crypto Poet. Fidor shows off its integration with the Ripple network. Want to hear some use case?
So how can we take payments global? So we've talked a little bit about SEPA today. Fidor has some APIs to tap into that. So wouldn't it be cool if you had euros in it?
That is single euro payments area, SEPA. Listen to this.
Any bank account, say like Deutsche or Credit Suisse, and you could actually send those euros to another account within SEPA, which is pretty fast clearing, but have that money converted into dollars, yen, or whatever other currency is actively trading on the Ripple network. That would be pretty freaking cool. So how are we going to do this? Well, Fidor's got some pretty cool APIs. Ripple also has some APIs, so maybe we can put them together to create this experience. That would be awesome. Yeah. So Patrick already alluded to this, but I'll just reiterate, even though we're API-rits, we need to respect the rules of the high seas of finance, including things like KYC and AML. You might have heard of them. Those can be expensive costs for developers to maintain, so I'm happy to see that Fidor is providing those solutions for the innovators in this space. So let's talk about the links in the chain a little bit to actually make a cross-currency transaction happen. Before I do that, I want to talk a little bit about what a Ripple gateway is.
Listen here.
Fidor is actually acting as a Ripple gateway after their integration. And what that means is that they are holding customer deposits in euros. And if a customer wants to transfer that money through Ripple, they can represent that euro balance on Ripple and send it through. So you can think of a gateway as kind of like a pseudo bank, right? They take in a deposit and they issue you a balance. So we have actors on the Ripple network today that aren't even actually traditional banks that are doing this type of thing. SnapSwap was referenced, and that's going to be a partner of Fidor for settling in US dollars. So gateways sync external payments with corresponding Ripple transactions. Ripple Labs has created a software framework called Gateway D that it can be integrated with external payment systems. So you can write custom code that connects to Gateway D so that those payments are mirrored in real time onto Ripple.
That's a great example of use case, isn't it? Let's keep going, because I could let the rest play, but you get the gist of that. Let's keep going. Now, I just want to give you this because it was so well put together. Listen to this. This is from Peter Pumpkin Eater. Thank you for this.
The Internet of Value is upon us. XRP is the fastest decentralized enterprise-grade digital currency asset for real-time, secure, and low-cost payments globally. XRP is the perfect payment solution for banks, payment providers, online businesses, corporations, and individuals, providing reliable, fast, easy, and convenient settlement of funds. Traditional methods are risky, time-consuming, and costly. XRP is rewiring global commerce, improving the cost, speed, and certainty of how transactions work, dramatically reducing friction. XRP's successful track record of stable blockchain technology and governance makes it ready for institutional and enterprise use.
And governance.
It's fast. XRP is 1,000 times faster and less expensive than Bitcoin. Your payments are settled in 3 to 4 seconds with extremely low transaction fees. With the open source technology built on advanced blockchain technology with a growing set of validators, XRP can handle consistently 1,500 transactions per second, 24/7, and can scale to handle the same throughput as Visa. It's easy and convenient.
And scale to have the same throughput as Visa. Well, that's interesting. And I'm not going to play the rest of it, even though the whole thing's fantastic. Let's get right to the point. The point is use case. Use case utility. Visa-backed payments platform, Currency Cloud, partners with Ripple. Is XRP in the mix? And then the article goes on, talks about it. It doesn't go into XRP at all in the article. But the reality is they're partnered with Ripple and the Ripple platform. And I think we all understand, if you've been in this space for any length of time, is that in order to get the full benefit of everything that Ripple has to offer, it involves ultimately the end goal of using the settlement option of XRP. Sure, could they use the software and just settle in fiat? Not only yes, but they're doing that now. At some point, they're going to kick in the use case of XRP. That's the whole point. That's the reason they have spent years pitching to customers. You can get 40% savings if you use the suite of software products, and up to 70, sometimes 80% savings if you use the digital asset for settlement. Do you think the financial world would go, I think I'll just take the 40%? How many of you actually go out here in the world and go into a retail store and go, man, I really like those shoes, but you know what? They're 40% off. I'll take them at 40%. And then somebody says, well, wait a minute. I can actually give them to you for 70% off if you come in on Saturday. No, I'll take them at 40. I just want the 40. Nobody wants just the 40. Everybody wants as much savings as they can possibly get. Just like I buy in a down market and I buy the dips because I know what I hold. I'm not giving financial advice. I'm just sharing with you what I do. Everyone has to follow their own path. When I look at the price of XRP and what's going on in this whole market, by the way, I look at it and I think, Bitcoin Ben, shout out to Bitcoin Ben, man. I love that guy. I had the chance to interview him briefly when we were at the convention last year, and I interviewed him for the documentary Cryptonaires, which is in post-production right now, ladies and gentlemen. I cannot wait for you guys to see this movie when it's done. But we're just going to give Jansen the time he needs. We'll get it done. At any rate, I had a great chance to talk with Bitcoin Ben, and he said something very, very practical. It just made so much sense. A lot of people really psychologically, when they think about going out and buying everyday items, they would never buy them unless they were on sale. But when people think about buying things like investment products, whether it's, cryptos or stocks, they don't want to buy when the price is going down. People FOMO when the price is going up. It's exactly opposite in the psychology of when people actually buy. And I think it's because they feel like they'll be embarrassed if they buy it when it's 26 or 25 cents. And then it doesn't go up or it goes down even more or what have you. It's because people really aren't doing the full due diligence on what's going on with the asset. And if not just the asset, in this particular instance, the market itself. And the market itself is missing a lot. And use case utility is a big thing that it's missing. And I'll tell you this, if they give XRP anything close to a currency designation or a hybrid token designation that has it looked at similar to a currency, there isn't one thing they really need to change as far as regulating in the banks, because banks are already regulated to deal with currency. And this thing could start running use case like you've never seen and make our heads spin. Now, before we get out the door here, let's just take a look at this because, Currency Cloud announces partnership with Ripple to process cross-border payments on RippleNet. Currency Cloud is tied in with Visa. Look at this. Amazon currently right now $3,411.10 for a share of Amazon stock. I remember years ago when Amazon was getting going and it went up to $100 or a couple $100, and then it crashed all the way back down to $5. What would you have done if that was XRP and it went to a few $100 and crashed all the way back to $5? What would you have done? Hopefully you would have looked at the fundamentals of the company and seen that they were pouring the money into expanding from books into selling everything under the sun and becoming the premier company for selling any good on the planet. Then look at this, because I had another one here too. Where is it? Google. It's right here. $1,631.07 currently right now. Both of them have a market cap over $1 trillion. It's 3 times or more larger than the entire crypto space market cap. That's where we are. So when you're looking at your phone and you're seeing a bloodbath, and it, believe me, and it's across the entire market in the crypto space, just ask yourself why. Just ask yourself what's missing. Because I think at the end of the day, you're going to come to the same conclusion I am. What's missing is use case utility. And once we have it, it's going to be a brand new day. And I think things will start to look a lot more like the Googles and Amazons of the world. All right, guys, that's going to do it for me. Hit the like and subscribe. Leave a comment below and share with somebody you know. I'll catch all of you on the next one.